Morning, everyone. Welcome to the prop trade and another interesting week ahead. Trump throwing his toys out of the cot following the Supreme Court ruling on Friday. Immediate global tariffs went to 10% across the board, blanket tariffs, having the Supreme Court ruled that he'd exceeded his authority in the way that implemented them. It was split vote. I mean, it wasn't unanimous by any means. There's some sympathy for his approach for some members of the Supreme Court, but ultimately they deemed it illegal. Obviously, his press conference was very belligerent. And then that was on Friday, and then on Saturday he's cranked them up again to 15%. So countries like the UK, which were on a 10% tariff. Reciprocal tariff sort of balanced really goods trade between the US and the UK. So it wasn't that big a deal, in all honesty. But that's now cranking to 15%. So if indeed anything comes of it, but lots of phone calls between lots of leaders and the president, no doubt, over the weekend. So worry remains, obviously, more significantly around the Iranian situation. That second carrier fleet from the US is in the Eastern Mediterranean, moving into the Gulf, and or moved out of the Eastern Mediterranean, I should say, and into the Gulf. So that situation is cranked up. Situation between Russia and Ukraine doesn't show any signs of easing. So generally, we got a bit of a risk-off scenario. Dollars down, Bitcoin's down, particularly went under 65,000 earlier this morning in Asian trades. And gold here, you can see the chart on the left there. Let me just move my great big head out of the way. There we are. Actually, let's move it down there. There we are. It's a wee bit bigger. So gold this morning went to $5,175. It's come down in the last few hours. But we're still at over 5,100. And gold bid on Friday, and it's continued to move higher in Asian trades. So crypto went on to 65. We're currently at 65,900 this morning. Big shock on open when the liquidity came in. A lot of that, not only about the tariff regime, this is Friday, this is the weekend, we're sort of moving down over the weekend, but there's also some chatter, not some chatter, some announcements with regard to regulation. So under 65,000, that pivot area we'd talked about for a long time, and 60,000, obviously that intraday low we got here on the 6th of February, at the beginning of the month, and we continue to crank low. We were under our two trend lines we'd had from the low last week, and ticking a bit higher Thursday, Friday, but down yesterday and down this morning on that regulation announcement. So remains what looked like a potential break of the 20-day moving average here on the was in sight. If we could get through the 70,000 level, we've moved down away from that, and we're now at the bottom of this initial price range at 65,000. We trade at 66,000. So this remains weak, as we've been saying for well over 2 weeks since that sell-off there on the 6th of February. We're in the final trading week of February, so see where Bitcoin remains, but quite a long sideways channel at the moment, the recent lows as well. So the breakout could be significant if we continue to spiral downside significantly as well. We could move up quite significant with some oomph into some announcement, particularly from the Trump administration around the crypto regulations, seen more in positive ways. But we'll see where that goes. But at the moment, that is very much non-tradable as a trend following trader and airing on the downside. So down day today, shorts in play. If we look at elsewhere, so the dollar is very much under pressure this morning. We look at, we'll come back to oil in a minute. Euro dollar 118.25. So from that breach of 118 on Thursday and Friday, in fact Wednesday was the big down day, wasn't it? Wednesday, Thursday, Friday, we're back through 118 this morning for the euro. Still under its 20-day moving average at 118.50, as we said last week. But euro on the front foot this morning against a weaker dollar. We got a bit of a risk off. Swissy particularly has moved well as well, 77.25 this morning. This is the daily chart, so ticking up all of last week for the dollar, and we're down. You say we gapped on open this morning on the Swiss franc, and we're down to 77.23. So dollar under pressure against the Swiss franc. The yen also on the front foot this morning. Chatter of a potential rate hike as early as next month from some former members of the Bank of Japan this morning. So dollar yen back to 145 from 155 on Friday, and a strong move up into the upper half of the Bollinger Band. No, that's what it looked like following Wednesday's big uptick from the 143.50 area, but that now looks to our downside target. So this down leg, this recent down leg, has rejected the 61.8 as it did on Friday, so the intraday wick, and we're now under the 50, and we're now into the 38. So key support on close today is 154.30, and then back here 154, and then 153.40, the next fib area to the downside. And the bottom of that candle from Wednesday take us to 153.26. So dollar under pressure. If certainly much end of day breakers, if we break this this into the under half of the Bollinger Band, which looks likely if we look at the move down, we've bounced a wee bit, but moved down, recovered since early trading, and moving back up. So today, if we're going to move high, we need to get over 154.75 for dollar yen and to the upside. Sterling. I say there's not a great deal of data moving things today. Where's sterling gone? Let's put in cable. I'll put in US dollar. 135.25 and continuing to move to the upside today. And again, you can see the reverse of the weakness from last week. Bottomed on Friday, interestingly, as the FTSE went to all-time highs on Friday. Cable was back up, but still after his breach of 136 earlier in the week, and the key breach of the hugely psychological 135 on Thursday, we couldn't break over 135 on Friday's close, but we were gapped again. Another one gapped on open this morning, and we've been as high as 135. 20, I think, this morning before it cooled off a wee bit. Still actually it's a 125. 135.35. So there we are, the high of the day. Just in the Europe, as the London brokers have got to their desks, and banks have got to their desks as the treasury markets open this morning. So it's cable moving ahead quite nicely this morning. Aussie 70.78. Again, bouncing back up, moving back this morning, and the Kiwi similarly 59.85, back dollar down again on the day so far today. Muted move from a break of 60 to the downside. Oil has weakened a bit on the 65.70, moved down on noises from Iran. So not that that's cooling at all, but the immediate panic from last week has eased off a bit. So oil has moved lower in Asian trade, 65.76, but we're still over 65 WTI, and Brent is still holding the key $70 level. Although we were gapped on open. So oil's weaker, gold's stronger, dollar's weaker, and Bitcoin is particularly weaker. As far as the stock market's concerned, the futures have opened obviously all weaker this morning. We look at the S&P 6873, the futures. So this was opening salvos. Closing salvos on Friday night, and these are our opening moves last night. So we were up here at 6,900. The market closed just over 6,909, 6,909. The cash market closed on Friday, and so far this morning we've been as low as 6,850. This morning, come around in the last couple of hours. This looks like it may be turning over here on the hourly chart. The S&P, that's just about to cross there on the hourly chart. So see if that's getting a bit of a lift. So it's the worst over. I mean, the thing that Trump said initially at that initial press conference was he banged on about the clarity being cleared now. We've had the uncertainty, and obviously they've been wondering about the CC's uncertainty has gone. He's expecting interest rates to come down under Walsh, the new Fed chair, and alternatives rejected tariffs. Foreign influence on the Supreme Court was the interesting line I took out of what he was saying. Where he's getting that from, I don't know. But there's often an element or grain of truth in some of the stuff that Trump bangs on about. But he obviously takes his own swing on it. Interesting, Brett Kavanaugh, one of his last appointees to the Supreme Court, talked about it being a really, really messy process now, because obviously corporate America, which is the people that are suffered the most, they're the ones that are paying the tariffs. So Trump goes on about how much money the US government has created, has saved or generated. I'm trying to find the thing that I used as a headline for my for the YouTube post this morning. I can't see it now. It's in the captions. That Goldman Sachs did about who's actually paying these tariffs, and it's obviously the corporate America, and they've absorbed them somewhat. Or the benign inflation has meant that there hasn't really been passed through inflation. But is the delay still yet to hit the American consumer, which is why consumer confidence moved down so much? We shall see as time goes on. Anyway, here we are, 10 minutes before open. What's happening in Europe then? So the DAX and the FTSE. I say the FTSE hit all-time highs on Friday. This is the hourly chart. It's moved down. As with all indices, all stock markets have moved lower. Futures, and we've sort of flattened out 10,660. So again, the hourly chart here looking to try and tick up potentially. So that's perhaps one to watch on open. Here it was triggered. It had gone long there at 6:45, and our 5-minute trade would have triggered there. That would have been long. Target 1 a bit later. And taken some of our profit off here on the first touch of the outside of the Bollinger Band, and then stayed with it until we'd moved higher. Still hasn't crossed. There's the cross down there and the cross there. So we'd have got out there, not much better than we were on the upside. So then we've moved down. So this is looking to go short on that cross there. So that would have actually, that big down kind of would have taken us out. So that would have been short, but that's gone against you now. So it's ticked back up. The DAX, so that's what I'm waiting for another signal there on the FTSE. So I don't really like trading the FTSE, to be honest. Similar move on the DAX, a bit more aggressive here. Got in earlier at 525. Target 1 would have been here. Target 2 there. Interestingly, we crossed there, so that would have closed out and then re-entered there on that one, taken out there, stayed long, and there's a cross there, so it would have there. The DAX has played ball better, and that's out there. That's also short from there. Stop loss would have probably not, but just about here, so it's probably been taken out that, but now that is technically short from about here. The DAX. That's a weak signal, but that's a weak short down the 5 minutes with 10 minutes to the open. So the DAX has been short. That was long from there, and that worked out. And we'll see how that runs. So I don't actually like trading the actual open. So that would be our entry there. Let's just what would have been our entry there? Again, you could still enter that because it's gone nowhere actually. So we could let's take that, shall we? Just for see how we actually get on with the open. So we're going to sell, and we're going to Put a stop loss in, just put a bit higher, 25,144, 25. Call it 148, 25,148. It's $36 negligible percent. So we're going to sell it because we're only selling one. Let's actually make it a bit more. Make it 5, shall we? So we're going to sell that. But obviously the volatility of the open may take us out on that. But that's short on this strategy because we're still we crossed the outside of the Bollinger Band. We had a cross in the overbought area of the stochastics. So we're down, and we're still we've had quite a significant move down there on the stochastic. So we're still moving down. So we could obviously could reverse quite violently on the open, given that what's gone on. So it's a risky trade, but I'm just demonstrating the strategy. So target 1. Let's amend that then. So let's make our target. I'll take profit here at the Bollinger Band. So that's 25,111. 25,111. There we go. And we'll see how that plays out. Currently out of the monies, but we'll see how the markets react to the that very violent or very significant gap on. Let's look at the gap again. Look at the let's smooth out the gap here. There's no gap here on the hourly chart. I've got the daily chart. Again, there's no, it's involved. Okay. Let's go back to our 5-minute trading time to see how that looks on open. Or the noise may have already happened. If we just go to the Asian markets, the Nikkei is at 56,900, continuing to move higher. So another one. That's February. Oh, smooth. That's absorbed. Interesting. So Nikkei moved down, but it's recovered most of Monday's losses there. You can see there's that opening hour. We opened down here and went as low as 56,455, and we're at 56,900. So it's recovered a good 400 points on the Nikkei there. And in Australia, 9,028. The 200 close, a bit more violence there, and Aussie potentially more trade deals more impacted. So a big move down from 9,100 to 8,000 to so 9,000. There's a big 100-point slip in the S4 200. But again, just like the other stock markets this morning, the futures as Australia's closed. Futures starting to move back up, or after hours trading moving back up over that key 9,000 level in Australia. So as the gold weakness continued as well, yeah. So it's continued to roll over. So that's been down. So this for quite a few hours now. So this might be an interesting one as well. Gold moved quite well for us. So there, yeah, we've got a choppy buy here on the 5-minute. First would have been, so it's moved down quite nicely. It's continued to move down. That's not what, let's see how that's looked like. It was moving up on this big candle here at 7:05, but then that sold off, so I'm out with that. So it's touched again. This looks like it might be finally moving around, but would have only just got long gold on that one there. See what we've done there? We've got a cross back down, so it's moving up. It's weak, but we're still getting here on the stochastics. Our blue line here is getting higher. Our orange line is also trending higher, but we're sort of been chopping across each other. So it wouldn't have been until that is a comfortable, or not comfortable, but that's the strongest of all the buys on gold at that point there. It's sort of been long using this strategy here with the 5136 for the initial target up here at top of the top point of the Bollinger Band, but obviously very much against the trend here, the 5-minute. But if we look at the hourly trend, it's looking like it may be trying to. Actually, no, I'm looking at the wrong. That's still moving down, isn't it? So that's very much against the trend. That 5-minute chart move higher on the gold market there. So we're careful with that one. So let's just flip back to the DAX. I don't like really doing the Nasdaq, but again, that one's short there. And that's moved quite nicely though. So that is actually interestingly I mean, it may stick here, but again, Nasdaq, the short would have been there. Let's take this just for demonstration purposes. So that's a short there as it's moving down. See, and we've even got a touch on the MACD. Not that we use the MACD on this strategy, but we're moving into the area. So let's just sell this one as well. With our stop loss 24,857 above our highs. 24,857. We'll sort that one as well. See how that plays out. Obviously, that's based on that, and that's our we've got our entered there. So we'll see how those play out. Let's go back to the DAX and the FTSE because they're the ones that are about to go live and have more interest, to be honest, when the volumes come in. So we're finally in the money on the DAX. No, yeah, just about 7 cents. So we got in here, having had a nice rally up. We look at the hourly chart. We're still in the under half of the Bollinger Band, so that's still relatively short. But it looks like the last set, the 6 till 7, the 7 till 8 candle is positive. And let's just click on the volumes as well. See how the volume will pick up. In the open trades, you can see as the US Open on Friday, the big 3 o'clock candle. So let's have a look at go back to our 5-minute charts. And there we go, we're in the money and it's moving down. So we've taken our first target out. Obviously, if we were trading this partially, we'd have had partial closure. That's what I'll do on my actual trading platform. I haven't done this on trading, so that's a hit target 1, and it's continuing to move to the downside. So it's a successful start to the trading week. We didn't actually put we didn't put a target on the Nasdaq, did we? Put our stop loss in, obviously, but our target is 24,828. Nasdaq going in the opposite direction, which obviously isn't unusual, but there's no real volume. So our initial target would be there, 24,820, 830, 24,830. Call it 31 because it's worth the round number. So I'll make that our take profit. There we are. Confirm we say that. We've actually been taken out, I think, haven't we? Have we been taken out? No, we're still in the money. Yeah, it's in the money on the Nasdaq. DAX. There we are, continuing to plummet lower, the DAX. And again, it looks like we may have, the uncertainty of the tariffs, the uncertainty of the political situation globally, particularly Iran, is obviously undermining stock markets and confidence. We're coming to the end of the massive earnings season. We've seen, obviously, on Wednesday we've got the biggest company of all, the new biggest company in the world, Nvidia, reporting earnings on Wednesday. Retailers last week weren't great. Walmart, in particular, normally a bellwether. Is the bellwether of retailers in the United States. Very, very tepid outlook, and they were marked down very significantly. But obviously, the situation around the uncertainty, markets hate uncertainty more than anything else. It's uncertainty. And I said, one of the first things that Trump said on Friday was he was saying that the uncertainty is gone. now that the Supreme Court have made their ruling, and we're in a position now to um, implement our tariffs in a different way. But I'm still going to go with them. I've always loved tariffs, blah blah blah, all of that. I said 10% initially on Friday, his knee-jerk reaction, 15% when he obviously thought about it. This is the legal maximum he's saying he's comfortable. He thinks he's fairly clear about getting away with. I remember we still got that threat hanging over Iran when he talked about the 10 to 15-day window for negotiations before something will happen. But there's an awful lot of hardware, firepower, both aerial, under the sea, above the sea, in this carrier fleet, ballistic missiles, all hovering around the Iranian regime. So that is a big worry as far as markets are concerned. So hence, stocks down. See if gold's reacted on the US, on the European, on the London open. The bullion market's not open yet, so we were long this, weren't we? So we didn't actually put a stop loss in there, but stop loss should have been down there. That's it. Is that a target? Was that stopped out? That Nasdaq. I'll come back to that in a minute. Something's closed. Gold actually moved down. So I say that was a tentative long. This is still moving up, but the prices have moved in the opposite direction. Oh, we didn't actually place a gold trade, did we? I thought it was just the indices. So that would be the Nasdaq. Then we were there. We are. It's at target 1. That's the target. It's taken out again, short. So moving to the downside, still moving. As I say, the programmed trade, so they're taking the whole trade out, would have closed half of it now, and stop loss. We'll see how it moves. Would have been moved to the entry, and we're trailing that down. So Nasdaq also low following the DAX move. DAX is obviously more exaggerated because we've got real volume. The FTSE having it hit all-time highs on Friday. Interestingly, spiked higher in the initial trades. Perhaps weaker sterling, but now reacting back the other way as well now. So that's there's the pre-market high. Pre-market 5-minute candle took us high, and we've been trekking higher. But this had already gone short. It hadn't played out. This now might be playing out actually in live market, the short position on the conclusion of that candle there, which is just finished, hasn't it? I just finished the 5-minute candle. So there's, in fact, that wouldn't have crossed there. So you're looking to enter on the close of this candle on the FTSE to go short. And if it's really close to the midline of the Bollinger Band, we won't put a target on there. We'd have our stop loss up above the top of the Bollinger Band. Ignore this spike for now; it's been sold clearly. But interesting, watch that for later in the day. 10,699. Remember the all-time high took us to 7 up here. 10,720. 10,745 on Friday, so that's obviously a player. That's a player today as well. 10,690. Given that was such a unless something significant in some particular stock, maybe some of the bigger stocks like BP with the gold, with the move we've seen in oil. I'm not actually sure what. Let's look what the Bloomberg guys are saying about particular sectors in the FTSE. I'll come back to that in a minute. There's a lot of stocks in Europe, particularly that benefited from the big fiscal spending in Europe, in particular, that's suffering at the moment. So this is what I'm looking at. Is FTSE. So FTSE is actually moving back up. So very messy. So I'm keeping an eye out of that. The DAX might have also done the same thing. No, DAX continuing to move higher. So DAX would have hit target one. Well, it has hit target one, and it's also hit target two now. So we'll be out of those this trade here, and now this one is looking. The next move will be to the upside when the or when or if when these stochastics cross. But at the moment we're still short. The continuation trade is still in place, so we'd again closed some out there, some out here on the first touch of the outside of the Bollinger Band. We've still got a descending K and D line, so we'd still leave another 20% or 30% on short. Obviously, the turnaround can be quite rapid in the open, so obviously be very careful of that. It's worked out our way. So we've had two winners, one on the Nasdaq and one on the Dow this morning, the DAX this morning, and I'm still hanging on to that, or I'd still be hanging on to partial position on that with my stop loss now probably just above the see how this candle finishes now, but I would have had it just around about the 20 period there on the 5-minute chart, locking in at least a little bit more of profit. So we'd have taken 50 off it here, another 20%, 30% off here on the touch, given that this is there's no hesitation in the K or the D line to tick back up. They're still moving low. I mean, they tend to anyway because of the way the maths works on them. But you can see also on the, not that we use this on this strategy, you can see the MACD and signal line are both, they've crossed later, but they're still moving down. We've got a big negative MACD, so MACD traders are also short on this one. So I'd leave some on there and run it down and see if we test our pre-market low, which we'd put in there at 25,055. So again, just 55 points above the key 25,000 round number on the DAX. So down we go in these first 10 minutes of the European trade this morning. Dollar, I would guess, would have remained weak. We don't really get a forex start like we do with the stock markets, but obviously the impact of the open still plays. So Euro 118.20. So it's come off a little bit from when we first saw it. So it's coming back down, isn't it? Remember we were just got the hourly chart. We'd gained quite significantly on open last night, and it sort of drifted a bit in the Asian trades, and we're down really on the if we go back to 15 minutes, we've been down into the US. Really, the forex market, the brokers and banks start trading around about 6:30. Is when the first trades start going through. Obviously, there might have been a wee bit earlier this morning, but there's really the first certainly London trades at 6:15 my time. Obviously, Europe starts now. It would have started. They'd been at their desks in Frankfurt and Paris and Milan earlier, an hour earlier. But there's the London first trade, 6:15, 6:30, and it's drifted since then. So Euro's down since the London forex markets have got into full swing. We've now started the cash session at 8 o'clock, and it's drifting a tad lower as well. So at 18.20 from 18.30, it's 10 pips, isn't it? But it's still holding its gains from what was quite a move against the euro, and benefiting the dollar last week. We had that big move, as I said earlier, on Wednesday, down again Thursday, bounced a wee bit on Friday. But the key thing on Friday was we were significantly, and that is a relative gap, significantly under the 118 handle. We've gapped on open this morning, and we're holding the flip side of 118, the other side of 118 this morning at 118.20 zones. So again, still relatively negative on that daily time frame because we're under the 20-day at 118.55. For that to then go positive. So see how the week plays out. Obviously, all sorts could happen, but dollar, I mean, basically, the upside dollar isn't as weak as it was in the Asian session in these opening few trades of the European session. Is my analysis of that, my friends. So take of that what you will. I hope you've followed us on the DAX and the Nasdaq. Successful starts. Let's just get these. Really, what we look at in these early morning trading the European opens that we do here. from 7:30 my time. So the Nasdaq 8.5. So it's continued actually to move up a tad. The 5 minutes still might have bounced a bit. There we are. So it's back and taken out all our shorts. So that's why we have our targets on there. You see, we're still, so that would have taken us out. We'd have pulled our stop loss down, and that's flattening. See the flattening of the blue line, flattening of the MACD and signal line on the MACD. I don't reuse this for that. So that's would have taken us out with our tight stop loss. DAX, similar sort of bounce, but we're still moving. We're still quite negative here. We haven't flattened here on either the K or the D line, but we have bounced quite significantly back there. So if I'd pulled, and say we'd have pulled the stop loss to here, I might be twitching to close that out now, given it was only a 5 minutes. I might be closing. If we close above this, certainly the heart, well, that was a big move on it. So I'd have pulled that down now. On the conclusion of that candle there at 5 past, I'd have had it at the 20. I'll pull it a bit further just to lock in some more in case this reacts back quite significantly as well. But we'll just give it a little bit of room to breathe. Remember, we've taken 50% and then 30%. We've still got 20% on, so just letting it run until there's some reaction to the stochastic lines here, either a flattening of the K or the D line, or indeed a touching across of the two, which would need a big move back up. But I say my stop loss now would be about halfway of this big bodied candle round about here. So I was looking at that might be taken out, but obviously we just put the one position here to first target there, and bish bosh, there we go. Because what this strategy is now saying to us, remember, is that we've touched the outside of the Bollinger Band, so we need a cross of the blue line from below to above the order. This is the standard trade, and look what happens. That's what happens when you get that movement. So I'm maybe twitching. That candle has concluded, so I'll pull my stop loss down again, perhaps to the top of the wick of that 8 minutes past candle. Hope you can see that. Don't think I can zoom in here. I can't, can I? So my stop loss is now here. Let's actually just put that on. So stop loss is now nice and tight, right in there to lock in this final profit on this final 20%. So at the top of the wick of that 5 minutes past 8 candle, I've been pushed up in, and the reason, look, we've got a closeness of the K and the D line. I don't want to give back too much, but I'm not giving back anything. Remember, we got in here, and that 20% is going to be that much. Our 50% was from the blue line to here. Another profit was taken here as we got to the outside of the Bollinger Band, and the last 20% is locked in now because we've got tin, but it looks like this is going to run out of steam, and the tightness of our stop loss is going to take us out. But it should also, if we get it, then maybe looking to go long on there. So there we go. So we're completely out of our short position. So part one, let me just make a so part one was from here. Remember, the initial reaction was there. We didn't get into there though, do we? That's 50% of our move. Then our next bit was change the color to blue. Our next bit would have been, so that was 50%. We then took another 30% off when we went all the way down there. So there's 30%. And then we took another that orange bit. So we took another 20% on that move there. So overall, a successful short there for the DAX on open, and we're still not long yet. This okay. So let's just undo our position. So this is now looking, but we need to make not only touch, but now have a sort of significant cross. So you see this touch here. We need to a bit of a gap between them. So patience, as ever, my friends, is key. We saw that the DAX, the Nasdaq, turned around immediately here at 10 past with this still descending stochastic, so that would have stopped us out on our second move lower. So we'd have got 50%, and the second 50% would have stopped out at entry. DAX is still was short successfully, looking to go long, but again, you see it's petered it out. But we've, our tight stop loss has taken us out. And the FTSE, much more volatile. Interesting, it went in the opposite direction to the DAX, went up and then it went down, and it's now starting to fall again. The FTSE. So that was the initial signal short there. Here, if we'd taken the FTSE at again at 5 past, if the stop loss, again, I don't trade the FTSE on this one, but the stop loss would have been above. We said it was here, wasn't it? So it would have taken us out, not at that wick, but it's danger of trading the open. But this might be a stronger candle to continue to move lower. So see how that one closes, and that would be a continuation short potentially on this strategy on the FTSE. Let's have a look at some of our other setups, and I'll leave you with a week ahead, and I'll see you tomorrow for. I can't remember what we're doing tomorrow. It's Trump's State of the Union speech much later on, but I think we're trading. I think we're doing a lesson tomorrow on the MACD and the parabolic SAR setup. I think that's tomorrow's webinar. But let's just have a look at some of the other layouts. So our MACD and parabolic SAR. So we're doing a webinar on this tomorrow. That's what we're doing tomorrow. So here we're looking similar sort of setup, two very simple indicators. So this was as the last positive cross of the MACD, the signal line, and the clear one is sort of happened there, but we haven't had a flip of the parabolic SAR. So this would have been long. This is more of a trend following strategy, this one, than a mean reverting strategy. So that would have gone long. At 7 o'clock, 7 o'clock candle there. So we got across the parabolic, the MACD and the signal line. We have a flip of the parabolic SAR. We continue to move up, trail our stop loss up. Down here somewhere. Let's turn. That's where the parabolic. It's a bit too close. So probably here. Up, up, up. Big down candle, but we're still in this because unless we'd moved our stop loss up a bit too ago, we probably did actually an out, but could have re-entered there as well on a positive engulfing candle. Up, 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 and then a big candle here just before open, and then it's gone mental, hasn't it, up to the upside, but we wouldn't have captured any of that, and then it's probably reversed us out, and we'd have been stopped out there. Because our stop loss would have been here now, and that would have stopped us out there for trading into the open. That's the risk of it. But that's now gone across to the downside on this candle. And it's also flipped. So this is no, it isn't, because it didn't cross. I think that cross hasn't cemented. It hasn't been a clean cross yet. So this is looking to potentially go short if there's a clean cross. Obviously, the problem is we get these chopping around and nothing happens. But that's looking to go short the MACD and signal. MACD and SAR. More on the MACD and SAR tomorrow. Next one. What's our Heikin Ashi candles? Well, Heikin Ashi candles was long from 7:35 long. Then it got out short, and it's looking to go short now because we've got no wick. So Heikin Ashi is at 20 past the hour. Obviously, that's 20 past 3 in the morning. It's the New York time here on the Heikin Ashi candles. Don't read too much into that. That is looking to go short in the next 4 minutes because we've got no wick at the moment. So we've had a strong move up, and obviously big volatility with wicks to both north and south here for 5, 10, 15 minutes here. It's starting to calm down, and direction is now a bit more clearer here, and that's the beauty of the Heikin Ashi candle. So this is looking to go short. But look at the spread here on the with Heikin Ashi candle. So that's looking to go short in the next couple of minutes. The trend follow the crossing moving average will be a bit choppy as well. But again, that was short from last night on open. It's been short all morning. That's the 15-minute chart. Sorry, make sure we're comparing apples with apples. So that was short all morning, and then in the Asian session, it's been chopping out. It hasn't wanted to go higher, has it? It's moved higher there at 7 o'clock, like the other markets had, but then it's stopped us out there. So it's made a little profit. It's got long there and actually stopped you out flat. Let me zoom that up so you can see that a bit better. There we are. That's gone long at 7 o'clock. Stop loss down here. Initially, we trailed the stop loss up as we've gone up, and again, it's probably been taken out at 7:20 on that reversal. Gone long again there, so that's taking you out there. It's definitely taking you out there at 7:25. But then it's gone, hasn't gone under the 20, so a continuation trade, either 35 or 45 into the open. Big opening candle. Is this the FTSE? It's not the DAX. That's why. I'm looking at the wrong. We were looking at FTSE. Oh, sorry, I was looking at FTSE before. Yeah, DAX long. There you are. Clearly short there on open on the DAX. Stop loss up here on the high of the day. Moved lower. Then it's reversed, and now it's reversed out. So that's closed out. So that would have been a losing. If you'd done that literally on the open, that would have been your entry here on the DAX using this strategy, the 5-minute one, and that would have been closed out. So that would be a losing trade as it's gone through. Certainly, I mean, the rule is the mid moving average, which is the green line on the completion of the candle. So it's looking like that's stopping you out. It'd been a bit more. Got the 2-minute. A bit more. You've been in and out quicker. The 2-minute and the 1-minute similarly. 1 minute. There's a big short there. Stop loss up here. Still shorts. Retrace really aggressively. But down. Pull the stop loss down. Taken out there. Completion long there. Stop loss down here. So that's still long. So 1 minute was long from 818, and stop loss down here, and that's still long. Stop loss dragged up now. Stop loss here, and we're running to the upside now on the DAX on the 1 minute time frame. And obviously the 5-minute much more choppy. And again, that you pays your money, you takes your choice. There's a risk of trading the open. Many people I know, trading the open would now be looking to take first trade, and that's why we get movement after, say, the first 15 minutes, first 20 minutes. What is the direction? Well, it was initially down. You can see here. Where is it? There's 5 minutes. It was initially down. It's bounced back up a bit, but it's still looking relatively weak in the higher time frame. So let me go back to my. See to go back to the VWAP. Is that? There we are. Oh, it must have been the FTSE we were looking at because the DAX has turned around. So it was the FTSE we were comparing all those charts with. So there we are. So the FTSE didn't actually get a clean entry in that 5-minute time frame. It hasn't gone short because it produced a wick to the top. So that's not happened. So anyway, let's go back to the main chart of these opening trades, which is the DAX and our main chart set up. I'm going to wrap this up now, my friends. So we were short, now that's gone long, and there we are. That's got a clean long there. So this is now gone long here. So target really now is the upper side of the Bollinger Band. Our entry, our stop loss would have been down here at the bottom of the Bollinger Band, actually. Well, it should be there, but let's make it here at the bottom of the Bollinger Band. So that's our stop loss, that's our target, and the entry on this system is here. There. I'm going to leave you with that. There's the green entry there because we've had that cross there and it's moving back up. We touched the outside of the Bollinger Band earlier on the open. We've had the cross, so we've gone long there. And see where the next candle's there. All right, pull the stop loss up. But our initial target, I'm saying the target there, I would, see it makes more sense to have it here, doesn't it? The previous high of the opening salvos, the pre-market high today, though, is way beyond that. So if it moves up, there we are. When you can cross it in there, looks a lot different, doesn't it? But let's see if we can get back to those highs later on. But you can see volumes dropped off quite significantly. But that is now long from 8:20. Remember, don't get too attached to these positions. These are only 5-minute time frames. In and out is where you want to be. Accept losses, take the profits when it's there. Don't try and give some profits back. This may flatten out, or who knows, but that's what that strategy would have done. It would have gone long there at 8:20. So I'm going to leave you, my friends. We've been here an hour. Just a quick look at the week ahead. It's very quiet compared to last week and the week before. A couple of speeches this afternoon. One from what may be early retiring Miss Lagarde, already quitting of the ECB last week. We had that move on the euro, and there was spark gossip that she may be going. Tomorrow we got NPR hearings for the committee in the UK House of Commons. Consumer confidence is quite key tomorrow. US consumer confidence tomorrow. Aussie inflation overnight on Wednesday. Trump's State of the Union speech on Wednesday. It's Tuesday night, not Wednesday night, isn't it? That's Tuesday. Oh yes, sorry, that's Wednesday, and Nvidia earnings as well. I'm sure that's Tuesday night. Okay. Nvidia earnings also on Wednesday. Weekly claims on Thursday, and a quiet close to the week with US PPI on Friday. Again, obviously delayed by at least 22 days, 15 days. This one, the other one was the other one. 15 days. Well, yeah. So it's the latest. Latest shutdown we had. So relatively quiet week, but obviously we got the end of the month, and obviously all eyes really on the situation between Washington and Tehran in particular, and what happens with the tariff noise this week as well. So take care. I'll see you tomorrow. Have a great Monday, and be safe, and just be kind to everyone, my friends. All right. All the best. May the pips be with you, my friends. See you tomorrow. Goodbye.